Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. I trust you had a good holiday season. I know I did, and that you're anxious to get into 2023 trading now that the 2022 year is winding down to an end. And in that wind down, instead of writing specifically about the markets over the next week of trading into the new year, I thought I'd take a broader view of the market technicals, and I'll look at that from an individual currency by currency pair basis, and also take a look at some of the things that happened in 2022. What were the strongest currencies? What were the weakest currencies? What were the reasons behind those, just in a broad type perspective, perhaps in a numbers type of perspective? And just give you that overview so that we understand where we are right now and where we may be going in 2023. So with that said, let's get into the big picture by looking at the strongest to the weakest of the major currencies in 2022. To do that, I've taken a look at all the currency pairs and calculated the difference between the end of 2021 and the end of 2022, or near the end where we are right now in the markets. And if you take a look at those percentage changes of those currency pairs, you can get an idea of which is the strongest and which is the weakest of those major currencies. So if you take a look at 2022, and if you look at the percentage changes of the currencies versus the US dollar as an example, you'd find that each of those major currencies showed gain or had declines versus the US dollar. The dollar rose against all those currency pairs. For instance, against the yen, the dollar rose 15.41%. Against the dollar Swiss, it wasn't as strong. It rose by 2.41%. Against the other currency pairs, the next highest gain that the dollar had was versus the pound versus US dollar. And those moves were dictated by the stories that happened in those countries and what happened in the US as well. In the general overall picture of why the US dollar was the strongest, well, the dollar benefited from what was a strong employment and higher inflation. From the employment standpoint, the end of 2021 had the unemployment rate at 3.9%. During the year, what did we see? We saw the unemployment rate move down to a low of 3.5%, which was the lowest level, tied for the lowest level from pre-COVID time period, and also going back to 1969. So the unemployment rate had not moved below 3.5%, going all the way back to that time period. And so that helped contribute to the dollar's strength. It ended the year unemployment rate at 3.7%, which is still near those low levels. The expectations into 2023 from the Fed is that unemployment rate will move higher, with the expectations of it rising to 4.6%. That's from their central tendencies. The other driver into the US dollar was inflation. And what we saw inflation in 2022 was that inflation in the US rose to a high of 9.1%. That rate for the CPI inflation was the highest level going back decades for the US. And inflation rate has since moved down to 7.1% at the end of, the November reading came in at 7.1%. But that's still above the Fed fund target of 2%. Other measures of inflation, the core CPI ended 2022 at 6.0% after closing 2021 at 5.5%. The core PCE, which is the favored measure of inflation from the Federal Reserve, reached a peak in 2022 of 5.4% in both February and March. Core PCE is down to 4.7% to end the year. The Fed is targeting 2% for that level. So not only did we have strong employment, we also saw strong inflation, and that's not a good thing for the Fed. It'll force them really to up their ante into tightening, moving rates higher at a very fast pace. We saw 4 tightenings of 75 basis points. We saw other tightenings of 50 basis points and 25 basis points through the year. Giving you an idea, at the end of last year, the Fed funds target rate was 0.25%. It's at 4.5% right now. They were targeting 1% in December of last year, and that forced the flow of funds into the U.S. dollars. Rates went higher. Investments came into the relative safety of the U.S. dollar and pushed the greenback to the upside. So that's the fundamental story for the U.S. dollar, why it was the strongest of the major currencies. On the other end of the spectrum is the dollar versus yen, and that currency was the weakest of the major currencies. It fell against all the major currencies, with the biggest decline being against the U.S. dollar, which is the same as if we had a gain of 15.41% for the U.S. dollar versus yen, we had a decline of minus 15.4% for the yen versus the U.S. dollar. So what was the fundamental story behind the yen's decline? And again, you can go back to the central bank. Whereas in the U.S., we had the Federal Reserve raising their rates from 0.25% to 4.5% currently, the Bank of Japan kept their rates steady throughout the year. The only chink in that armor, if you will, came at the last meeting in December, where the Bank of Japan said that instead of targeting a ceiling level for the 10-year yield at 0.25%, they would raise that to 0.5%. And that was a change in policy that got traders thinking, well, perhaps it's over for the rise in the dollar versus the yen, and we see some strength in the yen as a result. So although the yen still fell 15.41% versus the U.S. dollar, it was much lower than that in the end of October, November, and into December for that currency pair. We'll get into that when we start to look at the dollar versus yen from a charting perspective in another video between now and the end of the year. So the yen story was about the central bank keeping their rates unchanged throughout the year, and that led to traders selling the yen, buying other currencies like the dollar and the Swiss franc and the euro. Those were the 3 biggest movers versus the yen in 2022. So we know what happened in the strongest. We know what happened in the weakest. In between, we had the Swiss franc as the next strongest of the major currencies. General story for it is that they tend to be more of a safe haven currency. So with all this anxiety about inflation and wars and oil and all these other big macro stories that drove markets in 2022, the Swiss franc benefits from a safe haven flow, also from their neutral flow. They're not part of the Eurozone. The Swiss franc was stronger against all the major currencies with the exception of the US dollar. On the weaker side, right behind the yen as the weakest of the majors, was the pound versus US dollar. And the story of the pound versus US dollar, in addition to the inflation implications, slower growth from inflation, concerns about the supply of oil, concerns about their relationship with the euro, major trading partner as they fight the Russian and Ukraine war goes on their borders. That led to the pound versus US dollar moving to the downside. In addition to those fundamental stories, we also had the political stories that dominated in the UK. We saw 3 different administrations. We saw Boris Johnson hand off to Liz Truss, who quickly handed off to Sunak. And that also caused some uncertainty from investors. Flow of funds into that country became less. And as a result, we saw the pound versus US dollar move to the downside, was the second weakest of the major currencies. In between, we had the euro versus US dollar, the Canadian dollar, the Aussie dollar, and the New Zealand dollar. And as you can see, the changes of those currencies versus the other major currencies had a sawtooth pattern. We had some strength, and some weakness in all those currency pairs versus the majors through here. They were pretty much clustered together in the middle of the bell curve, if you will, of the strongest on this side and the weakest on that side. And so those currency pairs had a little bit of both going for them. They, of course, were all influenced by the same big macro storylines that happened in 2022, from the Ukraine to the price of energy to other inflation and slower growth and central bank policy. They were just less influence than the extremes, where we had the Federal Reserve on this side and the Bank of Japan on the other side. So that's the big picture of the strongest to the weakest of the major currencies in 2022, and a little bit of the fundamental stories behind why it happened. Now let's get into some of the nitty-gritties of technicals that are driving some of those currency pairs in 2022, and that will drive them in 2023. And I'll take a look at them from an individual perspective in individual videos going forward, and hope that you can learn from them and prepare yourself for 2023. My name is Greg Michalowski. Good fortune with your trading.